Deal TV, learn and earn.
Why hotels are an excellent real estate investment right now. A hotel is more than a potentially profitable piece of real estate in that it's an actively functioning, 24 hours a day, 7 days a week, operating business with a real estate component. Hotels derive most of their value from the proven ability to generate cash and the potential to increase income. In fact, the hotel's robust operational nature is one of the primary reasons you want a hotel as a part of your real estate portfolio. In a few ways, hotel investment differs from the big four commercial real estate asset classes: multifamily, office, industrial, and retail. The operational element adds risk and uncertainty, but it also offers a slew of additional perks that make hotel investing more appealing. The following factors are only a starting point for why you should invest in hotels. Any seasoned hotel investor could easily add another 10 or more reasons to this list. Reason number 1, nightly stays. The majority of a hotel's income is generated by individuals who rent one or more rooms on a nightly basis. They might require just one night's lodging or 2 weeks accommodation. Every night is another chance to boost income. The issue comes in optimizing each additional night's net earnings per room sold. The technical success of a hotel is determined by marketing and sales. It's simple to attract the proper audience by utilizing advertisements and collaborating with nearby activities and convention centers to increase the number of visitors staying at your hotel. The intangible assets, such as loyalty, guest experience, and property culture, are what keep guests talking about their experiences with you and bringing friends back to stay, the most crucial ingredient of any revenue stream. Real estate is the first to bounce back from a recession, but it's also the first to suffer if the economy goes in the opposite direction. To ensure that the hotel can withstand a decrease in demand, like during recent months, and yet remain profitable, an excellent investment opportunity in real estate must be based on strong economic fundamentals. Reason number 2, expense structure. The departmental, undistributed, and fixed categories in the usually standard hotel financial statement distinguish costs into 3 groups. The profit lines that follow each of these represent varying degrees of control over them. This category covers the costs associated with servicing rooms, offering food and drink services to visitors, and other departmental sales. The majority of these costs are associated with labor, while the remainder is composed of supplies and services. Undistributed costs include management, maintenance, sales-related expenses, and other generally required administrative-type costs. Property taxes, site fees, and energy bills are examples of this category. One of the most compelling reasons to invest in hotel real estate is hotel administration can negotiate with providers, reducing operational costs while revenue grows on another track. As revenue rises, the cost to maintain the hotel doesn't go up drastically, allowing for a healthy profit margin. Reason number 3, high risk-adjusted return. High yield is one of the most frequently cited reasons for real estate investors to invest in hotels. Across the board, hotel cap rates are greater than those of other business real estate assets. Any seasoned investment manager understands the risks and is always on the lookout for ways to minimize the downside while increasing the upside. The most competent hotel investment managers have considerable knowledge of both hotel operations and hotel asset management, as well as a thorough understanding of how to assist the real estate and operations aspects of the company. Reason number 4, tax benefits. If you're already a real estate investor or have been hanging around for a while, you know that direct real estate ownership is one of the most tax-efficient methods of investing available. So, United States tax law allows investors/owners to apply a depreciation expense schedule over a specified period to offset taxable income. Hotel investments are unique since they incorporate real, personal, and intangible property. As a result, investors do not only get the tax benefits and depreciation limitations for real estate, but also those for personal and intangible property. So, as part of the business plan, Management may make minor changes to a hotel's operations in order to improve cash flow and provide huge value, allowing investors to benefit from equity without paying tax on it. Finally, a 1031 exchange is the hallmark of any successful real estate empire. Flip 4 green houses to build a red hotel on your lot, just like in the game of Monopoly, right? Reason number 5, cost segregation. Hotel investments are divided into 3 categories for tax purposes: building, furnishings, and equipment, FF&E, and goodwill. The first 2, buildings and furnishings, are real items. Customer loyalty, employee relations, and other intangible factors that contribute to the hotel's success are known as goodwill. Investors in hotels can benefit from bonus depreciation policies that are unavailable in the multifamily, office, industrial, or retail asset classes. In many jurisdictions, real estate investors are required to pay a documentary stamp tax based on the value of the property sold. Note 1. Make sure the purchase price allocation and cost segregation values are consistent with your overall tax approach. This is a sophisticated asset management process that requires specialized training. Reason number 6, many levers for adding value. Hotels' primary source of value is their core business. This adaptability is one of the finest aspects about investing in hotels. The 4 areas of value enhancement in a hotel are: renovation. Expectations for hotel interiors, style, and amenities are always changing. In many instances, these are purely aesthetic modifications, but having a management team in place that is committed to keeping up with current trends and design will ensure a steady source of income over the long term. Operations. Hotel management is a people operation. Customer loyalty and employee engagement have a major influence on the ability of an organization to increase revenue and minimize costs. Contract positioning. Hotels need a wide range of sales and service contracts with quality operating partners to ensure quality operations. The brand licensing agreement and certain important maintenance agreements might have a significant influence on revenue and profitability. Even the tiniest value-add feature may improve a hotel's income, allowing investors to profit from value while multiplying cash flow. Reason number 7, community impact. Labor makes up half of hotel running costs. To run a hotel effectively, you'll need a lot of hands, all of which belong to residents of the local neighborhood. Hotels have a significant job creating impact on the local economy. Full-service hotels provide social and business gathering space, strongly representing the opportunity to relax and reconnect with those you care about. The most successful brands extend the hotel's ability to create community beyond the confines of their real estate. Reason number 8, you can experience it. Although the financial advantages of owning a hotel are obvious, experiencing it is beyond comparison to any other real estate investment. Even the simplest limited-service hotel offerings provide a space for guests to move around with very few impediments. They can get in and out of their room, stop by public spaces, and visit amenities with ease. Add a restaurant, meeting space, or a gym to that, and guests' experiences are instantly amplified. Reason number 9, it's challenging. As you're already well aware, investing in commercial real estate isn't just about cash flow and equity profits. Hotels represent one of the most challenging asset classes for a real estate investor because every level of investment in hotels, from passive to active, requires tremendous due diligence and a deep understanding of the industry. Investors must scrutinize and scrub all factors that impact the operation, especially external, market-related factors. As big as the hotel investment industry is, it still represents less than 3% of the total commercial real estate square footage in the United States. The major players all know and respect each other because they understand how difficult it is to consistently perform at the top of their game. Reason number 10, it's cool. The best reason to do anything is because you love it. When you invest in a hotel, You're making a high-profile investment into a beautiful property that sees lots of visitors, but you're also gaining invisible accolades. The ability to welcome your family and friends into a hospitality.
Deal TV, learn and earn.